Hey everyone, Coach Investor back to another video for today. So let's talk about Disney, the House of Mouse, one of the most popular and most loved brands on the planet. It's been a while since I covered this company and it has made some announcements more recently. Obviously, it had earnings as well. So we're gonna have a look at a couple of numbers that are interesting and crucial for the investment thesis. So first up, we have this. Last month, this came out and said Disney is developing planned communities for fans who never want to leave its clutches. Something that might look like this right here. Obviously, if you're a huge Disney fan, you know that Epcot was actually supposed to be something like this, where people can just live in that, let's call it, community city. Now, this idea might seem crazy, but to be honest, Disney fans are crazy, so maybe this might actually work out. And then more recently, this came out, and this is extremely interesting, especially if you're an investor in the company. So Disney Plus to introduce an ad-supported subscription offering in late 2022. So it says here, in a first for Disney's premier direct-to-consumer streaming service, Disney Plus will expand its offering for consumers by introducing an ad-supported subscription in addition to its option without ads. So if you don't like ads, you can just continue paying like you're paying today and you won't have any ads. Now, it will begin in the US in late 2022 and then they plan to expand internationally in 2023. This will obviously help them reach their larger audience because, well, maybe in some countries streaming is not needed, so it's a bit expensive and that's why some people might just not want to pay for this service. But with this, with an ad-supported service, this might help its mission. Now, do remember that they do own Hulu, ESPN Plus as well, and with those sides of the business, this type of streaming service already exists. This, by the way, might also be a huge positive for the Trade Desk and potentially also Roku. Now, talking about their long-term mission, their long-term goal, it's to target between 230 and 260 million Disney Plus subscribers by 2024. And now let's go look at a couple of numbers. For this past quarter, earnings per share were $1.06 versus the expected 61 cents, so a huge beat on that. Revenue came in at $21.82 billion, beating expectations of $18.63 billion. So again, huge miss by those analysts. Disney Plus subscribers, as you will see, reached 129.8 million versus an expected 125.75 million. And then Disney Parks revenue were $7.2 billion versus the expected $6.13 billion. So again, the analysts were completely lost. Now, with regards to the ad-supported subscription, this is great, to be honest, because yes, it will help them attract much more customers, but it will also help them on the balance sheet because, well, advertising on connected TVs is going to be huge. It's something that is growing year over year. Linear is slowly dying and connected TVs streaming is winning, and that's basically the future. So it's really good that Disney does go this route. It still gives you the option. If you don't want ads, you will pay and you won't get any ads. This is something that Netflix does not want to do. Netflix will stay without ads, which is a shame, to be honest, because they can add live sports and then maybe monetize that through advertising. Maybe that will change in the future, maybe not, who knows. But before we jump into the numbers, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. All right, so revenues grew 34% year over year, which is great. Net income from continuing operations also over 100%. Basically, it was an incredible year for Disney, but maybe that's because 2021 was a horrible year for Disney because of the pandemic and everything that's going on. So It's more of it's going back to normal and back to pre-pandemic levels. And this segment basically shows it. The Disney park experiences and products grew over 100% because, well, last year in that quarter, not everything was open, not everyone was willing to go to the parks, and still today international travel has still not returned back to normal, so that will obviously boost the business in the coming quarters. And as for the Disney media and entertainment side, so linear network was basically flat year over year, direct to consumer grew 34%, content sales and licensing grew 43%, elimination of intra-segment revenue decreased 3%, and then overall it grew 15% to $14.5 billion. Operating income for that segment decreased 44%. You can see here why with the content sales and licensing that decreased significantly, and the linear network decreased as well. And now with regards to the subscriber, as we said at the start of this video, they've reached 129.8 million subscribers for Disney Plus, that grew 37%. ESPN Plus grew 76% with sports coming back. That's normal. Then Hulu grew 15% to 45.3 million. And something we've talked about in the past videos is the fact that it's still extremely cheap and there is some pricing power here in the future, but right now they do want to focus on content and content only. So it is nice to see the positive changes here. Domestically, US and Canada, average monthly revenue per paid subscriber increased 15%, internationally 26%. Disney Plus Hotstar increased 5%. Hotstar is in India, so it is by design much cheaper. Disney Plus alone increased 9%. Then ESPN 15%. Hulu actually decreased. The SVOD only decreased 4%. The live TV and SVOD increased 16%. And as you can see, this is what advertising does. It is a huge difference, right? $87 versus a mere what? Let's take this number right here, the US, $6.68. So you see the potential here of having an ad-supported site. During the earnings call, they also mentioned that programming costs will increase in streaming by around $800 to $1 billion and $500 million for linear. That will obviously impact operating income already in Q2, so don't be surprised if you see some strange numbers there. They're also going to launch Disney Plus to another 50 countries or so this summer. They plan to reach around 160 countries by 2023. So overall, I do believe that Disney's business is coming out of this pandemic a much stronger business than when it went into the pandemic. Obviously, there is Disney Plus, but the parks are also experiencing some change. Overall, the brand, the franchise is getting bigger and bigger. Now, do not expect any dividends to come back anytime soon because they are reinvesting every single dollar back into their business, whether it's the streaming side or parks. No dividends in the next coming years. Obviously, in the long term, I do expect dividend payouts to come back, but right now they're really focusing on building a much bigger Disney company, a much bigger Disney brand, streaming, parks, content. It's all going the right way. Just need some time. Yes, the stock price right now, basically you're paying the same price right now, stock wise, not valuation wise, than when they just launched Disney Plus. So to me, it's a no-brainer, but I'm also a huge fan of Disney, so there is here some conflict of interest. But overall, I do like where this company is going. I do plan on going to one of the Disney parks this year, whether it's the summer or maybe at the end of the year, I do not know. Do let me know down in the comments below if you're planning a visit to a Disney park. And if you hold any of these shares, do let me know down in the comments below. And that will be it for this video. If you liked it, consider leaving a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. As always, guys, take care, stay safe, and see you all in the next video. Bye-bye.